So you've gotten 6 out of 9 finished, so you're 2/3, and the last 3 are pretty straightforward. We'll talk about paper 8, but I want to just refresh on paper 7 just to make sure you know what you're looking for. So there's really 4 pieces to it. One is the relative history. I'll refresh your memory on that. The next one is the ranking model. You should all have that. And the next one was the capital IQ free cash flow model. And then the last thing is your summary, your football chart. So those are the 4 pieces of paper 7. So relative value, you have this file here. I brought it through Lemon. If you're not sure it's working, you know, email it to me or something and make sure it's working. I don't know why Excel's having so many problems tonight. Yeah, it's just hourglassing for me. Whoa, don't know what that means. Whoa, that's really bizarre. I don't want to close everything. I just want to close that one. It's not letting me. All right, well, we'll come back to that one. The ranking model, you know, you're essentially just saying what were the factors that you used and had your firm come out. Here, I'm not looking for anything in your summary chart on that one. There are probably ways you could do it, but here you just want to discuss the model, what factors you used, and weights, and how your company and maybe key competitors ranked fundamentals to valuation. So it's pretty easy. It's just a discussion. You're essentially just explaining what you did in Excel. It's usually not a massive part. So bring in the graph, show the graph, the rankings, and maybe a summary chart on the factors. Then a final conclusion. What does that mean? Is your stock overvalued, undervalued? So that should be in the chart pretty easily. All right, so that one's fairly straightforward. And if I can get into Excel, I might have to just give up on Excel here. Yeah, let me reboot Excel. Boy. All right, thanks, Bill Gates. Yeah, it's still not. Boy, that's frustrating. Not sure if one of those files just didn't work or what. That doesn't make sense either. Boy, Excel is definitely broken tonight. Wow. All right, so everything's broken tonight. Have y'all seen this happen before? I don't think I've seen it. All right, let's try this again. Take the simplest file first. This one should be pretty simple. All Remind me to get your attendance at the end. All right, this is the one that crashed. Let's see if it will work this time. All right, that looks better. All right, so here's the relative value one. Make sure your last date is November sometime. If it goes down to no man's land, and find that last date and Control Shift down and right, and just get rid of all those extra ones. So for Lululemon, you're going to use EV to cells. And so there's a few things you're looking for. Is you can certainly graph them. So remember, these numbers are not their EV to cells. This is their EV to cells divided by the EV to cells of their industry and of the markets. So you can see Lululemon is trading very, very expensively to the index and to the market. Very expensive. You kind of expect that. It's a very, very fast growing company, so you expect it to be expensive. They have been much more expensive in the past. So you're looking at where are they versus their history. So historically, they've traded at 293%. Now they're just 256, so they're a little cheaper versus the S&P. They're a little cheaper than the history, and not much. All right, so you discuss that. If you look at the papers, I don't know if I can get a paper loaded here real quick. I'll do Costco again. I think I showed it to you before. So you just discuss it. You can do the chart where you do them just relatives, or you can put them together. Here, you put them together in one. His example is a little overkill, so I would probably do PE ratio and EV to sales for Lululemon. I probably do PE ratio and price to book for Deere. You know, it kind of just depends on the company. So 2 should be sufficient. I think he did all 4 of them, but 2 should be sufficient. Somebody for tech companies, EV to EBITDA probably makes the most sense, but for some reason that data doesn't update like the others. So you might get a chart that's a little bit it's got like gaps in it, but it works. It just looks a little bizarre, right? So you're going to talk about that, and then the real key here is so on the summary chart, you got your DCF model. Got your H model. You could do cap earnings. And now you're going to do the relative value. The way I'd recommend you do this is the median is base, maybe the 90th percentile is max, and the 10th percentile is minimum. Maybe play around with it, because if you've got a younger company like Lululemon, you might need to come into 80th and 20th, because it's just, you don't have much data and it's really extreme. But that's your summary chart. So very, very simple here. I don't know what Lululemon's current price is. So 427. Sorry. So the median is 293. So they're trading cheap to that. So if you take 427 times the median divided by the current, you get a price of 488. You do the, I'm going to do the 80th percentile for them. You can do the 427 times that divided by the current, gives you a much higher price. And then if you do the 20th percentile, same thing, current price times that divided by the historical. So there you got your three prices. It's pretty straightforward, right? Do you use the 90th percent, 20th percentile? Just depends on how old your company is, how stable it is, those type of things. But right now they're trading pretty much in line with where they have been historically. They've been really, really expensive in the past, trading at 400%, but that's so far back in their history. I kind of, that's why you have to play with it a little bit. A firm like Lululemon that has been extremely expensive and doesn't have as much history, you got to kind of play with that a little bit. But what would be reasonable for a EV to sales for a firm like this? The problem with Lululemon is that they're still growing fast, but not nearly as fast as they have been. So some of the history is a little bit out of whack for them. But if you're looking at a Chipotle or a Deere or someone with a lot more history, you can probably be a little more confident with the numbers. All right. So that gives you the relative value. On the ranking model, I wouldn't put that in here at all, but if you find a way to do it, you certainly can. And then the capital IQ model, if I can load that again. Yeah, these three prices, you only need the max and min anyway, right? You don't need the median. So you're gonna, the 317 is your minimum. So it's gonna range from 317 to 731. It might be the widest, it just depends. You know, I've seen some of y'all are the widest, like in the H model. It just depends on how aggressive you are in some of your assumptions. But this one might be the widest, especially for a firm like Lululemon that's been kind of all over the place. They've never been cheap, that's for sure. They're cheaper now. They're almost in line, but even at their cheapest, they're still 10% more expensive than their competitors. All right, and then the Cap IQ model, I know I have the model that I have used in prior classes. You could use that if you wanted to, but this might be the one that's blowing it up. We'll see. It's a much bigger file than it looks because there's so many hidden columns, which I don't like. A lot of hidden columns. I prefer to move all that to a different sheet and just say backup calculations or something. So we'll see if this one will work or not. All right, so here you have a model and you got to somehow finagle it to be in the ballpark of your assumptions for papers 5 and 6. So what would you change? Well, you got the risk-free rate and H14. You can just type in your risk-free rate from paper 5. You want to just type that rate in. So that works. You got the beta and H36. And here you can do your base, best, and worst. So that gives you 3 scenarios that you can run. And then you have growth. And growth is a little bit tricky. But here, I think you can finagle the model pretty well. You have revenue growth. And I think if you manipulate revenue growth, you could manipulate some of the others, but if you manipulate revenue growth, you can probably get your growth rate on line 78 to be what you want it to be. So line 69, That's in L69. To get you the earnings growth you want in line. Let's see if this is EBIT. Yeah, EBIT growth is on line 78. And again, you can do base, best, and worst, just like you did on paper 6. So that will give you those 3 scenarios that you can put into the model. And I think that's probably the most you need to adjust. I think the other numbers, you can just somewhat trust them. When it comes to cost of debt, the weight of debt, all those other things, I think you're probably best just using their numbers. And then that gives you a valuation on in H110. Now to get this to work, you got to be on Capital IQ machine that's working. So we've getting more of them working and some of y'all surprised me where you get it to work in FSC. I've only been able to get that one machine, but it's like they're finickies. It's like they wake up one day and decide, hey, I think I'll work today. So who knows? That one machine I use works. If you're having trouble, you could come by the FSC when I'm there. We probably get one of the machines to work. So if anyone has no access to Cap IQ because all you have is a Mac or whatever, you're probably gonna have to come into the FSC and get it to work there. So Cap IQ, that should be enough. That gives you 5 lines. So you'll put those 5 lines into the football chart. What I recommend that you add, you could certainly add the 52-week range. And then I would do a dotted line for the current price. That's the way I like to show the current part, because you're trying to see, is the current price to the right side or to the left side of my distributions? It's probably going to be in the middle of something. It's unlikely it's going to be below all of your scenarios or above all your scenarios. I've never really seen that before. If that's the case, you probably have some assumption problem somewhere in your math. But yeah, it's, trying to get some sense in one picture what your stock looks like. All right, so that in a nutshell is paper 7. Y'all get all of that? Y'all want this on Canvas? Or did y'all get it? Y'all do want it? I'll save it. I never get a no answer to any of that. Y'all are like, I don't know, but just put it out there. So paper 7 is not a tough paper. It's more Excel work. And so if you got the Excel, if anyone's struggling anywhere on the Excel, either come meet with me or on the model, the ranking model, catch me tomorrow or Thursday. I won't be here Friday. I'll be here Saturday, but I won't be here Friday or Sunday. So, try to get that finalized. All of these models finalized before you leave this weekend. Or, next week we don't have class, right? I'll be up here for finals and things, but it gets hard for me to help you after this week because I'm not on campus as frequently. I can be if y'all tell me. I'll set up aside a time where I'm here. But paper 7 is usually not that difficult. Most people do pretty well on paper 7. I get here probably around 1:30 or 2, and then I'm here till 7. Yeah. I try to get, or it depends on parking. So the day there's no parking, I had to park in the garage. I kept thinking the last week it wouldn't be as busy, but it was packed. If I get here at 12:30, there's plenty of parking. If I get here at 12:50, there's no parking. So that 1 o'clock class is killer. Right, any other questions on 7? So this capital IQ file is out there. Remember, there's 2 parts of it. There's the DCF part, which is tied to capital IQ. This was me doing Walmart where I copied and pasted his values. So the second sheet 1 won't help you at all. You have to be on the DCF sheet. That's the one that's tied to capital IQ. So it's just going to give you all error messages if you're not in capital IQ. No question. All right, so let's look a little bit more at paper 8, the easiest paper of all. Oh, one thing I say on the papers, it's getting a little confusing for some of y'all. So if you've given me a paper and I haven't graded it, you might let me know. It's like, oh, by the way, Professor Sweet, like there's one person who has papers 1, 2, 3, 5, and 6 graded. So either you haven't turned in 4 or I can't find it. So if you got a paper that you turn in, I haven't graded it, and y'all see where I'm putting the key, right? Y'all gotten that? I send you the keys. So if you see a paper with no grade, then I just can't find it. Some of you are turning paper 4 in with 2, 3, and 4. Some of you are turning in with 5 and 6. So, you know, I'll be able to handle it, but I got to know. So you might send me an email to say, hey, I turned in 4, and tell me where it is so I can go find it. So this class is really hard to grade because y'all are all over the place. And you don't have to delete all the papers and send that one, but you can send me all 7 papers all in one, and I'll just control to the bottom and start to use those. You don't need to do that, but I need to know that it's there. Some of y'all put little notes. Paper 7 starts on page 48 or whatever. That helps. All right, so this paper, you're going to do 3 things. You're going to move an average and pick 2 others. So here's a few. You can certainly put these charts into these Bloomberg charts into your paper, or you can use FinViz or whatever your source is. So here's a Bollinger Band. Bollinger Bands, very similar to RSI. I like Bollinger Bands better than RSI. I just think they're a little more, it's a more interesting picture. Very, very similar. Essentially what they're trying to do is find overbought and oversold situations. So overbought is a stock that gets above the upper band, and oversold is a stock that gets below the band. It does look somewhat impressive that stocks do tend to bounce off of these bands fairly consistently. There's probably some mathematical reason for that as well, just because of the way they're calculated. You will notice, I should have done NVIDIA, you will notice a stock that just really gets to an extreme point. So, you know, you have the description that Bloomberg gives you that you can summarize into your own words. So it's pretty simple. You get the chart, you find one you like, you get it. Bloomberg will do all the work for you, or FinViz will do all the work for you. FinViz is great for the moving averages. If I were y'all, I would be using FinViz because it adds those extra lines in there that you don't have to worry about drawing. And then I think Bloomberg does a great job on these other charts, although there are other sites online that do it. So if you don't have a Bloomberg account, you can find it other places. No, you can use your own. I gave you what we used at USAA. I think FinViz is 20 and yeah, 100. I don't know if they do 200. FinViz is probably a little shorter term. There's a philosophy. Some people like the 10 and 20 days just because they like more current information. Some people think that's too much noise. It kind of gets back to what Dow was saying. You're trying to avoid the noise from the actual trend. So if you're the shorter the period, the more noise you're going to pick up. So this is a perfectly acceptable chart. In fact, it looks messy because it's the black background, so it's kind of hard to distinguish. So it doesn't look as pretty, but having Bloomberg charts in your paper is actually kind of impressive, and people like that. So you have the Bloomberg description. You just got to simply figure out where your stock is. So really what you're going to do, you just finish paper 7 and you have a recommendation, buy, hold, or sell. If you have a buy recommendation, then paper 8 comes and says, well, do you want to buy right now or do you want to wait until it hits some point? So you're trying to look at the entry point. So all paper 8 is helping you after you finish paper 7. Let's say you put a sell on 7. You might want to say, well, we want to sell, but right now it's got strong momentum. So you may want to wait a while to sell and find a good point to sell. Or if you have a buy, right now it has very weak momentum. It's really trading sideways. I want to buy this stock, but I'm going to wait for it to do this. All right. That's what paper 8's adding for you. And it might be that it's just not telling you anything. So here's the definition they give you. And it's real simple. It's just standard deviation around the stock price to kind of show you um, what's going on with the stock versus its recent volatility. Periods when prices are extreme and possibly unstable levels. So they give you a good definition. You have to put it into your own words, but you can certainly, it's pretty straightforward type of definitions. Here's a list of some of the that they have. So they have popular ones. That may not be a bad place to go. The new ones I don't like because they're just crazy names, and most of them are real similar to something else, but just with some added math or some. So you kind of decide if you're trying to find something that's going to sound good in an interview. Yeah, you could get really esoteric, but you have to spend some time reading them and trying to figure them out. Some of them are pretty undecipherable. So, but the most popular ones, I'm a big fan of Fibonacci series, just because I'm a musician and in fact, it was interesting. An actuary friend of mine, he had a post on Facebook about Fibonacci and how wonderful it is. I said, yeah, we were talking about it in my secure analysis class, and I talked about it when I studied Bach in college. Bach used Fibonacci, so it's just everywhere. It's just an amazing thing. So if you're not familiar with Fibonacci, you might do that one just so you get some exposure to it. You get some really cool looking charts as well. So it's an interesting thing. So there's some you might want to add just because it's a good thing to know. You do see they have it broken in different groups. Statisticals are some of the ones that are kind of interesting, as probably more than some of the others. Here's the Ikomuchi tech definition. I think it's one of the more cool looking ones. I can't look at it and it tells me obviously what to do. So I have to reread it every single time I'll look at it. This is probably in about a fourth of the papers. So a lot of students do like it for some reason. I don't know how to pronounce it, so I don't really like that one. The RSI is popular only because it's one of the simpler ones. If it goes above the red and then crosses back to it, you want to sell. If it goes below the green and crosses back above it, you want to buy. The problem is, I don't think it works all that well. I don't think it's a very effective strategy. And it's not as interesting looking as the Bollinger Band. There's a lot of overlap between Bollinger Band. Essentially, these two lines are the same thing as Bollinger Band. It's just that they kind of make it a straight line instead of a rolling line. So it's kind of just telling you that upper band of Bollinger is this red line, the bottom band of Bollinger is the green line. And so they're just showing you where the stock is within those bands. And they give you the formula. Yeah, overbought, the securities move too high too quickly. If it breaks below 70, so if you go above the 7, and you can change these points, the 70 and 30, you can change them how far out you want to go. But if it goes above, it's overbought. When it breaks back down to it, that probably means it's about to break down. So that's your point. It gets a little tricky places like this. How specific does it have to break so that it's going below? That's where I think most people on these type of things, they kind of kid themselves as, oh yeah, they look at it and say, oh, that would have been a good buy. But yeah, I would have done it there. Or say, you know what, that's really not. This one worked pretty well, didn't it? This one, you don't know if we really did anything, but if you had, it would have worked really well. But that's kind of the problem, is exactly what are the rules. Here's an RSI for Chipotle. Chipotle had a big breakout. Here's one of those fill the gap kind of things. But would you have really sold it there? That's where it says to sell it. If you sold it there, that would have been good. I don't know why I'm getting this stuff down here. Go away. Why won't that go away? I'm having all kinds of technical problems today. So there's a buy point. I don't know about this stuff. That's the stuff that really bothers me. I don't know what you would have done here, but there's a buy point. That buy point would have done pretty well. And then here you haven't hit the sell point yet, right? So who's doing Chipotle? It's Dante and who else? I forget. There's somebody else. Maybe Alex. Yeah. So you haven't quite. So in here you say, yeah, strong upward momentum. It doesn't look close to a sell point yet. So, the moving average is catching up with it, but it's still above the moving average. But I don't know. Here's the RSI for the S&P 500 and the moving averages. That's the nice thing about the RSI is you can get the RSI and put the moving averages on it. So you could talk about two things at once if you wanted to and kind of get them all combined. Yeah, how do I get rid of all this? Yeah. It's like Bill Gates is watching me tonight. So the stock market had that wonderful breakout here the last few weeks, mainly because we got good CPI data. So, if you look at that one, the 50-day is still below the 100 days. So at USA, we wouldn't be trading yet. We'd be waiting for the 50 to move. It's going to take a while for the 50 move because it's somewhat influenced by this, whereas 100-day has this higher period. So, you missed out on a lot with my strategy with waiting for the 50 to cross. So it's just not working out very well on this one. Here you can see it's getting close to an overbought, but it's not quite there. Here was actually a pretty good point to sell. That would have told you to sell because it really sold out after that. So you can use this for individual stocks. You can use it for the overall market. Some ratios only work for the overall market. Some work much better for individual stocks. It kind of depends on the line. You're not going to use the advanced decline line for your stock because that's more of telling you if the market's overpriced. So I think this is a paper that we're running out of time, but this is a paper you can certainly sit at a Bloomberg terminal and do your entire paper in a couple of hours. It's not that hard of a paper to do. I can't tell you what's going on with the Bloomberg machine in the library. Has anyone been there in a while? Do you know if it's working? It's possible the FSC will be open next week. I just don't know. I'll try to check with Becky and let you know. It's possible they'll have workers in there. So I'll try to remember to ask Becky that question. If I'm here next week, it's because I have a final, which means I can't open the FSC for you. So, all right. So no one's been to the library. No one knows. Someone was saying it was working, but I don't. A few weeks ago, it was working. It was working. Not recently. And the Excel add-in was working too. Okay. All right. So let's look at a student example. So he did Bollinger, moving average, RSI. He did 4. You only have to do 3. So if you're doing Bollinger Bands, you can certainly look and see what he said. You have to put it into your own words. So he used, gosh, I don't know whose charts these are. He doesn't have the source on here. I think I remember seeing this. There's a few that we've found in class that actually give you the charts, so you can do them like this. What? In the notes? Okay. Yeah, there are some that work pretty well. FinVis works well for the moving average, but not much else because you have to pay them money. So this one looks like it works. So chart, you said stockchart.com. Okay. So there are some out there that will actually give you the stuff probably for free up until a point. And then they're going to say, do you want to subscribe? So momentum, I like what he did here. This is actually a good spot to show. He's using exactly my process, the 100, 200, the 50, 100, 200, and then you cross. So he's using exactly that. You don't have to, but he's using that. What he doesn't have here is the FinVis showing you if you're in a corridor or if you hit a resistance or whatever. So he's entirely using the moving average for that. But he's just explaining what the chart's telling him. So that's the RSI kind of boring, but it does have an RSI, and he's doing a good job on marking what it's telling him. So his just had a sell point right there. So if he was recommending a buy on this stock, he might say, okay, let's wait and see if this thing gets some support, and then we might buy, that kind of thing. And then he did the cloud. So if you don't like Bloomberg's definition, I think you probably get this definition from another source, because he's using, again, these are actually better looking charts than Bloomberg's, because you don't have it quite such a dark background that it comes out a little bit better. But so he did a pretty good job. He probably got 100 on this paper. And then make sure you have a conclusion on technical analysis, and the conclusion really needs to be is related back to paper 7. So if you're recommending a buy, this is a good time to buy. If you're recommending to sell, it's a good time to sell. So, right, all you're doing is trying to give a timing of a particular transaction. You don't want to sell a stock, even if it's at your target price, if it's just got this strong upward momentum. It's pretty simple. So I don't like his recommendation. I think his recommendation is, let's say he's recommending a sell, because this is Costco, it probably is, recommending to proceed or sell now, something like that, or recommending to wait to sell until when. So paper 7 said sell, recommend, wait until this, give some indication of. Now, the challenge you might have if you do 3, 2 might say buy and 1 might say sell. You kind of have to decide. So I'm not all that picky on that part. But he says Bollinger said this, Ichimoku said this, moving averages said this. This is my overall recommendation. All right. His paper is a little bit more than what I'm really asking for, but he does a good job of doing the definition and then explaining what's going on. I've had a few students that don't have anything on the conclusion, and that does cost you quite a bit of points. That's like a third of the paper, so make sure you do that. All right, any questions on paper 8? Fairly straightforward one. This is the one paper you probably would not have in your security analysis paper. I threw it in there just to make sure we have some technical, because there's a chance you didn't have any technical at all, undergraduates. So, at least have some exposure to it. It's used a lot in practice, a lot more than academia says we should. All right, so then your last paper you've already written. It's just a matter of figuring out what you're going to use. So your last paper is an executive summary, and it has 2 parts on it. One is the content, which is 50%, and 50% is how it looks. All right, this is the cosmetic paper. So the goal on the cosmetic side is you want to look as much like a sell side report as possible. So I'll put a couple of these examples out there. I could probably find better ones. So here's one from a firm that doesn't exist anymore, Credit Suisse. Try to make it look as pretty as possible, have some color to it. Most will have a target price and a recommendation. Your recommendation can be outperform, it can be buy, it can be strong buy. Outperform is a buy recommendation. They have a title that's kind of summarizes in a few words what you're recommending. They have a color coding. You remember when I showed you the Coca-Cola one, his was dark blue, and so that's going to come into the sell side as well. This is where a lot of times you'll see the columns where one column's really wide and one's really narrow. That makes it look pretty good. You have a table in there. Here's where your football chart can go. You might have a financial table where you just pull in some key data, kind of what you did in paper 3, but with not quite so much data. This is not that uncommon to have your forecast in here. That can be a really, really common thing to do. So pull it from paper 4, not everything, but some key data. This is kind of a football chart. But not everything that they have, but really it's the look. You just want it to look like a sales side report as much as possible. One, maybe 2 pages. All right. They have a lot more stuff in here, but we're just doing the exact summary here. Now it looks really, really pretty. When this is fall apart, when you actually start reading what they wrote, these are some of the worst writing I've ever seen in my life. Some of them are just terrible. So we like them as an industry leader, leading product, which is strongest in the mainstream market and continue to encroach in the high end as well. That's just a horrible sentence. This is really badly worded. So most of you, all of you in this room write better than these people write. I used to get these reports and I would kind of read through them. I was mainly looking for their charts. I wanted their data. So I wanted their adjusted numbers. So yeah, don't read them. They're not worth. So look at them as an example of the prettied up that you have. So could you go 2 pages? You could. This is overkill on the data. So kind of decide which charts. Some students like to put the paper 7 ranking model chart in this first paper. That can certainly work. That in your football chart might be sufficient for his charts to use. Is there something from paper 3 you might want to show? I don't know. If you want to show great improvement on turnover and margin, you could certainly do that. So you kind of decide what you want to put into the paper, but it really is, you've written these 8 papers. What of these papers is the most important you got to put for whoever is consuming your data, okay? I do like the bullet with the titles. That can be good. These titles are perfectly fine, but there's others that you can use. Some people will do their strength and weakness summary chart as one of their charts they put in here. So there's a lot of options. So 50% is the looks. So make it as pretty looking as you possibly can. Here's one on Jack in the Box. Cowan. This is the earnings update. So this really isn't a sell side report, but it's a summary of the earnings. You can certainly do this, put your name over here and don't put CFA if you're not a CFA, put your name over there. A lot of times, and I've noticed a few of y'all are doing this, using the we pronoun because it's your firm. So that's fine if you want to use we. You can use I don't count off on that since it is really your paper. A lot of verbiage, not much bolding in here, so I prefer more bolding. But again, it's the color coding and it's a summary up at the top. And then this one doesn't have many charts. I wish I could find more examples. One place you can go for more examples, you go into the UTSA library and you do databases and look under I. Go way, way, way down. Invest text. It's bought by merchant online. So if you do this, you can find some of these. You got to be real careful of looking for it. So let's try Chipotle, I guess. This has changed quite a bit since merchant online purchased them. So and then you can do it's the company research. You want the research button. Yeah, I haven't been in here in a while, so but there is a way to get sell side research from Investex. All right, you'll have to hunt around. If I figure it out before now on Thursday, I'll show you how to do it. Yeah, it's in there somewhere. So there are other ways to get it. Also, if you go on Bloomberg, Bloomberg has research reports on companies, and you can bring those in. You're looking for format. So I generally, if the company reported earnings in October, I really don't want to look at stuff that was written back in April. But for your purposes, that's fine because you're just looking for formatting. So find a good report. The best ones, JP Morgan, UBS, Goldman Sachs, Cowen. I'm trying to think of, forget the name of the firm that some of our alums are working out right now. I can't think, it's not coming to me. But there's some of the big names that you can get a really good looking format of what to include, what not to include. So there are a lot of, I'll try to find some between now and Thursday. It used to be InvestX was all by itself and you just go right into it. You got all these reports, but now you gotta get through their other pieces here. So make it look impressive, not just for the grade, but when you send this paper on LinkedIn, the human resources people are probably not going to make it past page 2. So this is the thing they're going to see, and this is the part you want to make it look as professional as possible. All right. 2 pages, maybe 3, really 1 is the key. You want that first page to be spectacular. And you want to find what are those 2 to 5 most important things about your firm. It could be something related to the industry, could be related to something related to a new product this firm is doing, something that catches the attention. What's the most important thing that they're working on right now that they've got to get right? The biggest risk, some do that. What's the biggest risk? What we should focus on, be most focused on right now. Where does the market have it wrong? Those type of comments are really powerful. So the market is really missing this attribute. So those are things that draw in the reader and really get them excited about your report. Storytelling is important. You've got to get into a few sentences what's really going on about this company. That's why I mentioned the Costco CEO. He was able to just in a few sentences explain exactly what this firm is after. So I forget some of y'all. Oh, who was it? I'm thinking of Business Breakdown, but you got a firm that's going through a CEO change. That's going to probably be highlighted. Right now, we got to see who's going to replace this person. That's going to be pretty critical. If they're expanding into a new market, we got to see how this works. We need to watch and see this number. We're watching for this number. And if you are saying that, let's say your real focus is on, let's say you're doing Target. They have that big inventory problem. So Target had too much inventory. They fixed that, right? The stock price jumped back, but a few months ago, they had too much inventory. So maybe you'll show inventory chart, inventory turnover, and you put that into the paper. So this is what we're focused on right now. Or maybe it's their margin. Their margins have collapsed recently, but it's starting to turn back. This is what we're focusing on. So what charts you put in depends on what your story is. So the charts should support the story. Don't add charts just to add charts. You probably want at least 1 table of numbers because that's really common in these type of reports. But you got to make sure you're not just don't throw in that chart you did for paper 3. That's way too much, but you might pick a few lines in that. So you probably want a good synopsis at the beginning. So we're initiating. You can certainly do it like that, right? When do you say initiating? It's your first time for your firm to write about this company. That sounds like you, doesn't it? Isn't this your first time to write a research for your company? So we're initiating a buy recommendation of this firm, given it's blank. That's your first sentence that really says the key of it. You can talk about other things, but it says real key. We're initiating a buy on this firm because we think Lululemon is going to be really strong moving into the men's market. Or we think Chipotle has some great overseas opportunities here. Whatever. I think Chipotle would do great in Costa Rica. If Taco Bell is doing great in Costa Rica, Chipotle, I don't know if they're in Costa Rica, but you might say this is a place where we see some strong growth going forward. Use of bullets and bolding is important. You don't want a massive paragraph. All right. You want to break a lot of white space. That's why that right column, having the white space, this is actually pretty good for the reader. This one I actually like better than the Jack in the Box because it's broken up more. Pretty small font, isn't it? I don't know what font that is, but that's pretty small. You can get away with small font if you got a lot of white space. Here they have the analyst on the right side. You can see it goes, either direction. Don't exactly copy them. There's some stuff in here that I don't think. One thing you can definitely do in the first paper, I don't think they have it in here. Yeah, the stock performance year to date is not a bad thing to put in this first paper because a lot of people don't know. Is this stock outperforming the market? I might do the stock, the market, and its industry if I had that. So where do you get the industry? You saw the tickers for the industry that you can do. You can put that, you can get that data and build your own chart. Pretty easy to do. So that can be a really good chart to do. They have it on the second page, which is not a bad placement for it. It kind of depends on what it's telling you. If there's some information there. I don't know what year this year is. Really flat market. 2020. So this is the COVID year. That doesn't look. Oh, this is 2019, 2020. So there's COVID. Yeah. So they had 2 years in there. That seems a little bit overkill. I might just do year to date. They have the that is their football chart. Blue sky, gray sky. I wouldn't get cutesy like that if I were you. That works with human resources, but it doesn't work well with the finance people you're going to talk to. So I'd probably leave that out. Be specific and be bold. We had one CFA research team, and I knew they weren't going to make it because they were like, well, in this scenario, we have a buy recommendation. In this scenario, we'd say sell. That's not going to fly. If you're not sure, it's like, man, I don't know if I'm buy or sell. Guess how you decide. Find a quarter and flip it, heads, buys, sells, and then passionately make that argument. All right. Am I saying that because you're a college student? No, you're going to do that even in real life. You've got to be bold. I actually don't think we're as confident as we sound, but you just have to be overly confident in here and just go for it. So you know what? I'm going to go with buy, and then you make it the best buy recommendation you can. All right. So don't say you're not sure. Now on the risk side, you could say where I could be wrong in this is this, but keep it very strong until that point, and then you're just saying you're giving yourself an out, but don't overdo that. So have a strong buy. Hold is usually not good on these. If you can get a buy or a sell, you're much better off. Hold is just too weak. Most of them are buy recommendations anyway on the sell side because if they put a sell, the CFO stops talking to them, so they're going to probably do buy. Yeah, I say InvestX. I'll have to work on that to get y'all a better inroad on that one.
If we the current price in relation to sell, would we want to list like in paper 7 at the end a price that we would hold at and a price which we would?
Most have just a target price. That's just the norm. So you have a target price, and then the range. They put the range on the second page. I would probably put the football chart on the first page. I mean, that's the other thing. If you have a target price, you might put that on the football chart as well. So you have the current price and the. If I were to leave out anything, it'd probably be the 52-week range because that's kind of just extra noise. If I did the 52-week range, I'd probably do it in a different color than the others. So I could say, here's my stuff, here's the actual stock, and then you do the stock. The advantage of the 52-week range is you can see where the stock is relative to that. Is it at a low point or is it a high point? So it does have some good information to it, but you might play around with colors or shapes and that kind of thing. So it stands out from the other things. So your target price might be a different type of line than the current price and then the range. So, find a way to really show let's see what Costco did. I can't really remember what he did. Now on this one, it's the very first thing, right? You put it in the beginning. So he showed where they stood, a little bit busy. You're showing Costco went from 13% to 14% market share. That's a lot of space, but he got it in there. He put his model in there. He put his SWOT in there. And he did his, so you can see how he did the 52-week is dark blue. His ranges are kind of light blue. There's the target price and there's the current price. So obviously he's putting a sell recommendation on that. He did the stock performance for the year. He kind of has everything in there. This side looks pretty good. He's got an introductory paragraphs of some bolding. He calls it catalyst for growth and risk. So he says, what's the upside? What are we looking for? The risk, obviously, the risk he doesn't mention, which is really important, is this is a really expensive stock. So the market loves the stock. So it's priced for not maybe perfection, but it's priced on the really optimistic side. He did his differentiation. I think this is a little overkill for this paper, but he put that in there. Amazingly, he got a lot of stuff into one page. That's really amazing. He probably got a good score on the color, on the kind of the look of it. It does look pretty professional. What he left out was well, it's up there, but he had to kind of I think I put student name in there. He has a sell, he has a target price, the current price. You want the current price and the target price in there. This is probably important, is the date of your current price, so they kind of know that. This is a challenge with this class, is you wrote paper 6 a few weeks ago and the stock's up 20% now. What do you do? Well, do your best, kind of find whatever. So it's possible you had a sell recommendation, and since the time you did a sell recommendation, the stock's dropped 40%. I don't know what you do with that. You just have to kind of figure that out. You're writing a paper over a long period of time. This is a pretty good example. I'm not sure I agree with everything you put in there, but he did it in a good way that it looks professional. This especially, he did a good job with that. Catalyst growth, investment risk, and a good summary at the front. So that's pretty good. I do think this is a little busy over here. I might find one of these things to kick out. So it's not, I'll probably kick out this top thing here. Now, some students, they go from this to an index. I'm not a big fan of the index. If you look at the Cowan one again, they do have an index. I guess it's okay. I guess my problem with the index is I hate word indexes because they're so hard to build. You have to do you have to link it. So I think it's a pain just to build it. I don't know if you ever built one before. It takes a lot of time to build one. So I'm kind of trying to save you time. If you want to build one, that's fine. I don't think it makes it look more professional. I think they probably did it because their readership probably likes that because they can find stuff faster. But from your standpoint, no one's going to do that. But it's up to you. I'll leave it up to you. But linking these page numbers is such a pain to me. I've also had trouble getting the dots to work out just right. So it's probably just me not knowing Word. But here's their papers 1 through 9. Much more summarized than yours, right? But a lot of more charts. Kind of depends on the firm. Some firms are more wordy and some are more charty. Some are just entirely charts and no words at all. So it kind of depends on the firm. Oh, there it is. Stock charts, stock TA. There's some charts for paper 8. All right, so that's all the papers. So questions up to this point. So I'll be around tomorrow, and then after tomorrow and Thursday, I'm around a little bit, like from 1:30 to 2, and then 4:45 to 5:30, but not a whole lot. If I need to come up, you're gonna have to tell me to do that, so I have to. And it's possible that I'll let y'all know when I have finals. So it's possible I could stay after the final or come before the final. So like my life insurance final is what, 6 o'clock? I remember. So I could probably get here at 3 or 4, but y'all have to tell me. Don't email me December 9th at 6 p.m. and say, I got to really get the Bloomberg because I'm going to be home grading hundreds of, well, probably not hundreds at that point, a lot of papers. And so I'm grading several hundred papers over the next 2 weeks. So I really need to be home because the drive up here and drive home, that's, you know, how I think this time of year, that's like 4 papers I can grade. So that's my entire thought process to get things done. So, we'll talk about this career. So Thursday will be a little bit easier. Maybe I'll get Investex to work. I'll work on it a little bit. But I want to talk about this career itself. Now I'm probably the best person to talk about it because I was a security analyst for 9 months. I went from a 9-month security analyst to head of equities. That's not the norm. You don't normally make that jump. So it was kind of bizarre. But I was there for 9 months. And guess what I did? Exactly what you're doing. This is what you do. So I want you to have some confidence in your first job as an analyst. If you're not sure what to do, just do what you did in this class. It really is perfectly fine to do. So you've seen some of the quotes from students in this class that this paper got them the job, just showing them this paper. People are impressed with this paper. So it's not a bad approach. But I'll talk about the actual workload and what you actually do on the job. We'll maybe talk a little bit about sell versus buy side. I've never worked on the sell side, but I've worked a lot with the sell side. They're very impressive people, but they're sweatshops. They're very, very stressful, long hour types of jobs, but they look great on a resume. So we'll talk that Thursday night. So Thursday night will be a little more relaxed. So what questions or comments or concerns that y'all have? The last 3 papers you see, they're the easiest. So y'all can see how that was the most straightforward. So is anyone having trouble with their Excel models? You need to get to me. All right, so we'll stop it there. I'm not hearing any questions. Y'all are probably just shell shocked. All right, let's start. So our last class, the FSC is supposed to be open all 5 days next week. So hopefully you won't have any trouble getting in there, probably in the afternoons. I don't know what the regular schedule is, but they should have a regular schedule next week. They won't be open after Friday of next week. So, but that's kind of drop dead anyway, because grades are due next Monday. I'll be up here for finals, I think Tuesday and Thursday, but I don't have plans. I guess I could have one if y'all need me. You know, you got to tell me if you need something. As far as this file here, Wang and I did it for Visa here. There's 1, 2, 3, 4, 5, 6 cells you got to be careful about. H14 is your risk-free rate. You can just type that in there. H15 is not your market risk premium, but your expected return on stocks, whatever you're adding, you know, so that minus risk-free is your market risk premium. So you can just put in your total expected return in that cell. H36 is your beta. You can have 3 scenarios on that. L69 is your growth in revenue, but you might look down a few lines and look at EBITDA and see if you're getting the growth you want there. You kind of have to play with those numbers a little bit. You'll probably run 3 scenarios there. Q99 is your EV to EBITDA. What I recommend you do here is the file on relative value. Go to your EV to EBITDA and maybe do the median, the 80th percentile and 20th. Though Julia sent me a file I thought was interesting. Let's see if I can find it. Just gotta find it. Okay. So she found this from Gamadera that I thought was interesting. I don't know if I can take a picture of if you're interested in it, but for coming up with the EV to EBITDA, he has what he recommends for each industry. So I'm not sure exactly how you got these numbers. It might just be a curiosity. Like if you're using 22 and he's showing 14.59, that might not be, might give you a little bit of concern. But So my guess is what he's showing here is what they actually are. So that might not be as useful, but he's got some interesting information in here. Anyway, so the motor in has, a lot of data he provides for free, and he just keeps it updated. But the simplest you can do is just go to your file and get the EBITDA and just get some data on medians and 80th and 20th percentile. It kind of depends I can't remember long what we did on Visa, but kind of depends on your company. When we're looking at Lululemon, their numbers were so high to start with, you might not use the entire history. You might use something a little more, maybe last 5 years or something if you have some really extreme numbers. But then you just type in, so you do 3 scenarios there. So you do 3 scenarios on beta, 3 scenarios on growth, and 3 scenarios there. And then on H110, you get the result. Now, if Capital IQ is not working, what you can do is email me what you want for those things, and I'll run it for you and send you the file back. All right. So if you just can't get Capital IQ to work, I don't know, Alejandro, how far you got today. So some machines it was working, some it wasn't. With Genesis, it worked until it blew up. Did you get it to finally work? No. So when you do it, you'll have to do it here, which has the formulas that don't work. Once you get it, you have to copy and paste it, and you have to just paste it. And then you have to copy and paste it as values the second time. If you try to copy it and paste it as values, it always gives you an error message. But if you can't get it to work, I'll do it for you. It only takes, but you have to give me what you want. What are your 3 betas? What desired growth rates do you want kind of for your earnings? Your 3 scenarios there, I'll work something out. And then using that relative value file, what are the 3 EVs, EBITDAs you want? If you do that, I'll build this file for you and send it back to you. So I'm trying to make it easy for you because I know Capital IQ is just completely unreliable for some reason. I'll probably need it, by Tuesday at noon or something, because once I start getting exams next week, I'm gonna be pretty busy on exams. So it's gonna be a little tough. So if you're not getting any luck with this, best you do it yourself so you can kind of see how this model works. Essentially what this model is doing is they're coming with free cash flow. They're getting free cash flow by looking at net enterprise and EBITDA. They're getting for EBITDA. And so once they get free cash flow, they're then valuing the firm using WACC. Once they get that value, they subtract out the debt and they got the value of the firm. That's the most common model you'll see on the investment banking side. This is the whole reason they changed the title of this class and put corporate valuation, because that's what this is, corporate valuation. I don't like doing it because I don't want you to have to get a WACC, because we already have too much to do in this class as it is. So I'm letting you trust this model to get the WACC correctly. So you don't have to do all the others. You just got to give it its cost of equity. But once you get the cost of equity, you can trust it to do the WACC and do the free cash flow. But that's what the model's doing. So you understand what the model's doing. So you can say you've run one of these models. So I'm really not asking for much. It's just a little added step to put into your football chart. All right, any questions on that? Wow, I've missed a couple of y'all here. All right, so let's talk about this from a career standpoint, security analysis. So I don't know if any of y'all have a security analyst job. Victory Capital is interviewing right now for an intern. So I didn't push any of y'all names to them because I thought most of you are probably graduating here. Victory Capital is one of the few major security analyst jobs here in town. It's almost entirely fixed income. They do have some equity. So first of all, what is the profession? Finance. So you have a few areas. You have corporate finance. You have investment management, investment banking, and wealth management. So the security analysts is in the investment management world. This is security analyst and ultimately portfolio manager. That's what you're after. That's your career procession. However, I do know a lot of people that are just security analysts their entire career. They don't want to be portfolio managers, and they make a lot of money, 7-digit salaries, just as security analysts. So you can just stay that route if you don't want the stress of being portfolio manager. You just want to be the numbers analyst person, then you can actually stay on that side. Corporate finance is financial analyst. Is it doing that? Why wouldn't it? On the way. I keep hitting the wrong buttons. And I don't know what button I'm hitting. And probably won't. I'm really good at finding the button you would never need and hitting it and messing everything up. So financial analyst, and then from there, it's like, who knows? I prefer, if you're not sure, I say go corporate finance. That's the best way to start. First, that's where the most of the jobs are. It's the easiest to interview for because you just, enter. I would, if I were you, I would have done this back in July, but I would have signed up for 10 companies a day and just corporate side, company after company after company in all different industries, just sign up for all those kind of jobs. There's a lot of jobs, but the nice thing about the corporate finance side is it can go to the investment side. And I actually think that's probably one of the best routes. So if you start on the corporate side, you get to learn the industry from the inside out. Now you think about my career, I started out in insurance. So I was working with actuaries, life actuaries, P&C actuaries. I was working inside underwriters, all those people, the investment people. You can't learn that if you start at JP Morgan and become an insurance analyst. You just can't get that inside scoop. So the corporate side is an incredible way to do it. Some of y'all have some good corporate experience that you could work. I had a guy working for me. He was a manager at Albertsons. When he joined my department, the investment people called me and asked if they could talk to him because they want to know how Albertsons was run from the inside. So, I mean, he had, he's just a manager of an Albertsons. It's like, but no, that was valuable information. So the corporate side is not bad. How do you pick your firm on the corporate side? You don't. You just interview and you pick the ones that offer you jobs, and you hope it's something you enjoy. Right. So there's plenty of jobs out there. I didn't pick USAA because I wanted to do insurance. I picked it because they offered me a job. So you can certainly do that. So the big advantage on the corporate side is you get to learn stuff from inside the company you just cannot get anywhere else. So imagine if you work at Valero, you're just getting some incredible inside scoop on how refiners are operated. You can't get that anywhere else. Start there. How long would you start there, work there? You could probably, after 3 years, go to the investment side if you wanted to. It'd be very easy to do. I did the corporate side for like 10 years before I went to the investment side. It was valuable, learned a lot, very, very indispensable. A good friend of mine who's at Victory Capital now, he started on the insurance and banking side, and he went over as a banking analyst, and he broadened out the energy and other things, but he got the job as a banking analyst because he did so much on the banking side. So I have students say, I want to do the investment management side, and they feel like it's a failure if they can't get a job there. It's not. You don't have to start where you're going to be 20 years. You don't have to start there now. You can start somewhere and move over, but you need to be in the right place. So the key here is work. So if you're going to go from corporate to investment, you need to work in the right areas. And the key here is value chain management. What is that value chain management? How's the product started? How's it developed? How's it marketed? How's it sold? How's it serviced? You want to understand that. So Valero is very, very obvious. How do they buy their oil? What's that whole process? How do they refine it? How to decide what to refine? Some of y'all might go into the investment society meeting when Valero spoke. Really good presentation, quite complex. How to decide to produce this versus this. It's an amazingly complex structure. You want to learn that. You got to get to that. You actually will beg your boss, can I rotate over to this area? Can I work in this area versus this? You want to get that kind of experience. HEB, you want to know how they're sourcing from the farmers, from Kellogg's, from Coca-Cola. You need that type of experience. That's extremely important. So if you're on the corporate side and you want to move to the investment side, you've got to think like an investor. What's the most complicated part of this product, this company, and how do I learn that? So that's when you're begging your boss for rotations. I had one guy at USAA, he was on the real estate side and he wanted to learn my department. So he said, I just want to volunteer my time. You don't have to pay me anything. I'll come over 2 days a week, and his boss let him do that. You got to do those kind of things. You might say, well, that's a lot of overtime. Yeah, when in your first 5 years of your career, overtime is what you got to do. It's not overtime just to work more hours. It's overtime because you want more exposure to other things. So you just start volunteering your time to do those kind of things. So the corporate side can work fine. The investment management side, there you're going to interview with the JP Morgans, Goldman, etc. You want to interview with the biggest firms possible. Why not Victory Capital? Because Victory Capital hires one new person every 3 or 4 years. You just don't have much hope. JP Morgan, they probably hire 50 to 100 people a year. You have a lot of success. And they're trying more diversity, so women especially are having good success. You can just look in your finance classes. What's the percentage men and women? It's pretty low in the women, isn't it? So women have an advantage, and I know Goldman Sachs has a women in finance conference. We've had several of our students get a job by going to those conferences. So take advantage of whatever you got. If you speak a foreign language, that's really useful. I've had some students get jobs because they're fluent in Spanish. Whatever you have. So yeah, you're competing against a lot of people, but you look at your unique skills and you put those out there, and that will link. So you apply to all these firms. The key with this type of thing are the conferences. You got to see what program they have. Most of them will have something where they invite a lot of students to some conference. That's where they identify. You usually have to do that versus the on-campus interviews. You really have to figure out what those things are. I don't know. Juan Carlos, how did you get the Wells thing? Did you just interview?
Yes,
So you just sign up for an interview online?
yes.
You didn't go through kind of a student conference or anything?
No, but I know my brother did Latino rights for JP Morgan. And there's also women in it for JP Morgan for women. And there's also black companies.
Yeah, so you look out for those kind of things, and you just see what they are, what they have. So the investment management side tends to be more of that connection kind of thing, whereas the corporate side is not as well organized. The investment side knows they're competing against each other, and so if Goldman does something, JP Morgan's going to do it. You're not going to see that on the corporate side. They're all out there just kind of guessing what to do, and they have no clue, and they're just making stuff up. I've talked to Valero several times. I've got a good contact there. And they're just constantly like, well, what if we did this? What if we do this? What if we started in April instead of May? Those kind of things. They've tried some stuff that just did not work. And then they tried something else. So it's the corporate side. Usually on the corporate side, it is sign up online. I don't know how long does it take to sign up for an interview? Can you do 10 a day? Is that possible, or is that too time consuming? I bet you could do 10 a day. How long would that take? Maybe an hour? Can you do one every 6 minutes? But it's volume. So you sign up for 100, you get 3 interviews. Or you sign up for 100, you get 10 interviews. Out of 10 interviews, you get 1 job offer. I bet it's not even that good, right? This is volume. It's not that the competition is that strict. There's just a lot of jobs. The problem is there's a lot of jobs and a lot of people interviewing, and you just got to put your name out there a lot of times. So I'm not a big fan of entry level on the investment side, but you certainly can find those jobs. I've had some students do some of the smaller ones here, like Sendero. We had one student from this class, actually a student, I didn't know him very well. He was very quiet, but his papers were exceptional. And so I talked to the guy at Sendero. I said, you should just interview this, kid. You guys are kids to me, but so you just interview this kid. he's really strange. So he got the job, and he's doing really well there. Last time I talked to him, he's doing great. But it's a smaller investment firm. It's kind of one of those kind of local, maybe $1 billion in assets. It's not real large firm. Um, and he got the job, and he's doing well. So you can do those. The other side is the family office. So I think Victor spoke this week, and I think he's at a family office. I didn't know what family office it was. Anybody know? They listened in on that presentation. If I had a choice, I would do the family office because it's much more flexible. You have a lot more freedom to do certain things, and you're probably being trained by somebody that really wants to train you. But how do you find family offices? That I don't know because I didn't know what a family office was when I was your age. Y'all know what a family office is? So we had someone, I can't remember who it was, working for Rockefeller family. I don't remember who that person was. Um, yeah, I don't know who these are. So you could probably find them out there. Here's some, I've heard of some of these. There you got Bezos has his own family office. Who's the buffet restaurant? Golden Corral, is that it? I think they have a family office. That one's actually pretty impressive. I heard a podcast. I think it was Golden Corral. Did a Golden Corral their family office? It's a family that started Golden Corral, and they suddenly had billions of dollars. So they just started their own investment firm. And listening to that podcast, I was thinking, boy, that would be the perfect job. I would love that. They can do hedge funds, they can do private equity, they can do just whatever they want, and they don't care if they underperform. Because they're like markets get crazy sometimes. So what do we care? We're just got this strategy and we're going with it. So these you would have to really search for them. A lot of them are in cities with major universities like Harvard or whatever, and they just hire from those schools. But you might be surprised of just emailing someone there. Well, there's a Rockefeller. So we had some. Anybody remember who the guy was speaking from? Who was it? Jabari. Oh, that's right, Jabari. That's right. You might contact Jabari's been very open to like email me. I'll do what I can. So, and Jabari is probably gonna have some pretty good coattails if you want to connect with someone, and he's gonna do well in this industry. He was in this class. He was the one I probably shouldn't tell the story about him, but he got behind in the class, and I was like, man, I don't know if he can catch up. And he turned in his paper at the end, and it was exceptional. Really, he did a good job of putting together paper kind of at the last week, but really, really good paper. So I just could tell he's going to do well in this industry. So he'd be a good contact. These are great, great jobs. So on the investment side, you've got to be a little more selective. You got to try different things. I don't like the smaller firms. Not that I don't think Sandoro is not a great company, but it's just the resources are so much more limited. And you tend not to you don't get the contacts and the network you'll get at a JP Morgan or Goldman. So then you have the investment banking side. And the investment banking side, we can talk the sell side. You definitely have that. You have the M&A and et cetera. I mean, there's all kinds of stuff that they're doing, capital raising, and they do a bunch of things. But the sell side is probably what we're most thinking about on this side. So the sell side, so up here we're talking the buy side. JP Morgan does the buy side and the sell side. They do both, right? So, and I don't know, Dante, what is your job? Which side is it on?
We work with people that are on the platform.
So you're in the investment management side. So yeah, investment is the buy side. So you can kind of tell from the title, they're buying stocks. The sell side doesn't buy anything. They just sell, and they don't sell stocks either. They sell research. They're just consultants. So what the sell side does is they just write a bunch of sell side research. They just write papers on companies, and the buy side pays them money for their research. This side is somewhat shrunk because you have to be real careful. If you're going to do the sell side, you better go research soft dollar. You better research it because the laws have changed. Are y'all familiar with soft dollar? I'm not, because it all changed after It all changed after I retired. So soft dollar used to be, so the way it worked at USAA, this is the old rules. I don't know the new rules, but in the old rules, we would get research from the sell side, and we were soft dollar. The way we would soft dollar it is we would get other services from them, and then they would give us all the research for free. So we might do some trading with them, and they would charge us for the trading, and that trading would cover all the sell side. And so essentially we're getting all the sell side for free, but we really weren't because we're giving them all this other business. Well, now the rules have changed and they say you can't really do that anymore. You have to pay for it. And so firms don't want to have to pay for it because it makes their expenses go up. So essentially what USAA was doing was kind of, yeah, we're doing, 10 to $20 billion of trades a year. We'll just give all that to these firms. In fact, there's one point where I probably shouldn't say these stories, but one of the research firms, Alliance Bernstein, one of our teams really loved their research, but we didn't have any relationships with them. So they came over to me and said, Ron, can you throw them $1 billion in trade? If you do, they'll give us all that research for free. For free. Not really, they don't say free, but soft dollar. So they wanted a soft dollar to, if we didn't do that, they're going to charge like $300,000 bucks. Well, they didn't have $300,000 bucks. So I said, $1 billion in trades, sure, I'll do it. So, and we're real careful. We gave them exactly $1 billion. We didn't give them $1.1 billion. We gave them exactly $1 billion. So I go to my trade desk and say, do you mind trading with this firm? And they look at it and said, no, they're fine. I don't mind it. And so they gave them the trades and then they got their research. That's the old school. I don't know the new rules. I haven't researched them. I don't even know the name of the law. It's probably in here. They don't tell the law here. So U.S. Congress created safe harbor under Section 28 in the 34 Act. I don't know how old this is. So it's gotten very, very touchy. The reason this is big on the sell side is now firms are having to pay more of this out of pocket. And so it's starting to restrict that side. So I don't know how it's impacted the industry. I've heard several podcasts where they're talking about how this has had a huge impact on the size of the industry. Any of y'all know that are working out there? Because I'm 14 years away from this. Are y'all hearing this in your discussions at all? So what side are you on, Juan Carlos?
On the sell side.
You're on the sell side. Are you hearing them talk about soft dollar?
No.
All right. So you probably should research that. That's how you're paid on the sell side is through this. So the world, I can't really help you on that because I left after all this changed. It was kind of you kind of wink. Yeah, well, we're giving this research that kind of, you're paying for it through your trades. So the sell side does the research. They're actually restricted from doing any buys because you don't want them to buy a stock and then push the stock to the buy side. So you buy what they're pushing, right? There's got to be this arm's length. So they're on the side. So they're doing essentially what we're doing in this class. That's why I want your executive summary to look as much like a sell side as possible. Now, Juan Carlos, you took this class, right?
Yes.
What did your paper look like did you look sell side in your exec summary? I can't remember what you did. What company did you do?
Yeah, I think pasta.
Okay, I can't remember. I have to go find your paper. It was a good paper, but I just can't remember. So you want to make this look as much like the sell side, mainly because even if you're interviewing on the buy side, you want it to look sell side because they want to know that you can do this type of research. Now, the students I've known that have done sell side, they will generally have, say, maybe 10 or 20 companies. It's a very small number of companies. So the first student I knew went to JP Morgan. He was on the consumer staple side and he had 10 companies. And that's all he had to worry about was 10 companies. Imagine that spending, 2,000 hours a year and you only have 10 companies. You're going to know those companies really, really, really well. He worked there for about a year and a half, 2 years, and then he moved over to the buy side. So you can certainly do this. Other parts of the investment banking, it's really, really tough. You can talk about, Yeah, I would put private equity up here. Private equity is really tough to get into if you're at UTSA because they don't hire UTSA students. They hire UT Austin, they hire Stanford, MIT. But we do have students on the private equity side. So we have a student up in Austin who moved over to the private equity side. So it is possible, but you're not going to start there probably. If you're UTSA, not that there's anything wrong with UTSA, it's just private equity doesn't think of UTSA. There just doesn't come to their mind. Mainly because these are smaller departments and they hire very few and they just want to go to one school, get their students, and they're done. So private equity, it's exactly what you do in this class, but you just don't have any data because the company's not publicly traded. You can't go to Bloomberg, you can't go to, you just get your data from the from the company itself. So you could do that. That would be a great second career to do. Maybe once you hit 10 years into your career, private equity would not be a bad place to work. But like John in Austin, I think he graduated maybe 5 years ago, and he's moved over pretty quickly. But he's aggressive. I tell you what, he's very smart, very confident, and he just moves. He sees an opportunity, he goes for it. You almost have to kind of be like that to do this kind of jobs. And then wealth management. These are, I'm sorry to say it, these are sales jobs. I'm not a I don't like wealth management, so sorry if I know y'all going to wealth management. I mean, some people like it. It's not my thing. I'm not a salesperson. I can't sell anything to anybody. I can't sell umbrellas if it's pouring down rain. I just can't do it.
Because I suppose it on the investment banking side, on top of doing M&A, you can also raise, or corporate bonds.
Yeah. Yeah. Issuance, definitely. And you're doing your job at, I saw last night, someone had the word syndicated, that word syndicate, you're putting together some pretty complex deals. So yeah, on the issuance side, you can certainly do some things that are very creative and very interesting. So wealth management, but wealth management can be an entry point. So the guy Lance at Victory Capital, really sharp guy. He forgot to interview his senior year. And so he just missed out. So he started out on wealth management at USA, but he got a CFA really fast. Very impressive. I interviewed him for a job. I couldn't hire him because I kind of already knew who I was going to hire. So, but I picked up the phone and I was able to get him into another job somewhere else. And he came back to the investment side as fast as he could. He moved up really fast. So what he did, he started on wealth management and then he just worked his tail off. He volunteered for everything and he moved up fast. And so just 1-2 years in, he moved up fast, got a CFA. So that's pretty important. The CFA, we just talked about that earlier at the 5 o'clock. The CFA, even just part one, will open up a lot of doors. So you can start wealth management. The problem with wealth management is you got to do what? SEI? See, I don't know. What are the series now? 6. There's one higher one. What's the other one? 63. Yeah, I don't know. I didn't have to do any of those. I was on the I was always buy side. I was also always institutional side. So I don't think they're difficult exams, but they do take some time. There's a lot of memorization you got to do. So you might go ahead and get the SEI out of the way. You could get the CFA out of the way. There probably is some overlap between those two. I would imagine if you're ready for the CFA, you can probably pass the SEI, but I don't know for sure. So, getting those things out of the way can certainly help. But he started at USA on the wealth management side, got the CFA just as fast as he could. And I knew he was going to be good. I just interviewing him, I could tell he was going to be really good. So you can prove yourself on wealth management. Wealth management as a career is very, it's a sales type of job. It really is. You're focusing on that. So the people who do this are the people who want to be entrepreneurs. They want to do wealth management for years and they want to start their own firm. You can certainly do that. You're not going to make as much money as you would up here, but you can make pretty decent money. Some people like this. The guy who spoke to the investment society, he liked it because he had control over his time. He could take off more time. You're your own boss. So I don't like firms like Edward Jones and those type of firms. I'm going to step on toes. Sorry. This is just my opinion. I think they grossly overcharge for their services. I think they're way too expensive for what they add. So y'all might disagree with me on that. His point was he could add a lot of value on the tax side. I do agree with that. They can do some pretty sophisticated tax planning. Beyond that, I don't think they add much value. On the investment side, they have a lot of conflicts of interest. I don't think they do any better than anybody else on that, and they charge a lot for what they do. So that's just my opinion. You can read my blog on that and see why I don't like that side. But if that's all you can do, let's say you interview too late, you have some early grade issues, whatever, get the SEI, you can start on wealth management side and then get as fast to the CFA as you can. The CFA will get you out of there. Now, guess what your boss is going to know the second you sign up for the CFA? She's going to know you're not staying there very long. Signing up for the CFA, they know you won't have, because what do wealth managers get? Ultimately, they get the CFP. You get the CFA, you're saying, forget you wealth management people. I want to be on the big side with the investment side. Now I have the CFA. It's the hardest exam I've ever taken. I have a CPA, a lot easier. So CFA is a tough exam. I've never taken the CFP, but a guy who worked for me who had a CFA, he took the CFP. He studied for 1 week and he passed it first try. So he had no trouble with it. So I think if you study for the CFA is not that difficult of an exam. And most wealth managers know that the CFA is a much more rigorous exam. Now, there is a harder exam than the CFA. That's the FSA. So actuaries, I have to admit, actuary is harder. But CFA is about as difficult as you can get. Now, there are other exams out there that you can do if you're really trying to open doors. And I don't know the names of them all. There's a modeling certification. And I just don't know what they are. SM, FM, VA. Oh, there it is. Yeah, these are all after my time. I think this would open some doors because it's, from what I've seen from it, I had one student take it. I was looking at what they were studying. It seems pretty impressive. Have you looked into it?
I want to look into it after.
Okay. Now, I'd probably do the CFA first, but I don't know. It's probably a pretty tough exam. It's probably been a lot of hours. So you have to decide. I have 6 professional designations. The way I did it was got the CPA first because I'm an accountant. So, get that out of the way if you're an accountant. I did this FLMI because I'm working for a life insurance company. Then I did the CPU because I was working life, and so CPU is kind of a wealth management kind of thing. I then did the treasury management because I was doing treasury management. So I kind of got a certification based on where I was. I got the CMA. I'm not sure why, but that's management accounting. I guess I thought I was going to be an accountant for a while. I got that one. That was actually more valuable to me and more difficult than the CPA. And then I got the CFA last. So the CFA was the last one I did. So I probably was overkill on that. So you don't need 6 professional designations. That's kind of crazy. But 2 or 3 may not be that bad to do. But so the CFA may be an obvious one to do if you want to be on the investment side. And in fact, that is an obvious one. If you get on the investment side, in fact, Dante and Juan Carlos, they're probably going to be pushing the CFA on y'all pretty early if they haven't already. I don't know if that's come up in interviews, but they're going to be expecting you to, right? Are y'all working with CFAs in those jobs? Have y'all seen them? I mean, is your boss a CFA?
I
don't think so. Okay, so you're probably going to see some in that. So that's just an obvious one. It's a tough exam. It's 900 hours of studying. Huh? Yeah, I'm not a big fan of MBAs. MBAs especially. I have an MBA and it was somewhat of a waste. I don't like MBAs. I don't like MS Finance. And I shouldn't say this. I'll probably cut it out of my video. MS Finance is undergraduate again. It's the exact same material again. The problem with the MS Finance, some of y'all get it, it's fine, but you better be as rigorous as you can. You got to take the toughest classes. The toughest classes have like 3 people in them because MBAs avoid the toughest classes. So I took the speculative markets class. There was 5 of us in that class. The reason, and I'll just tell you, when I was taking the MBA, everybody's talking about the quant class, and they're all saying, "Oh, don't take that class; is so hard, so hard." So I took it. It was like the easiest class in the entire thing. MBAs hate math; they hate quant. You don't get paid in finance by avoiding math. You got to have the quant. So MS Finance is finance again, but just at the graduate level. The problem with MS and MBAs is in finance, they pay you to specialize and they can't specialize in MS Finance. They cannot teach a class on a particular sector in finance. It's just not possible. It's very general. And so you're just getting too much general. So if I were you, I would wait on the master's until later. So my recommendation, I think this is really, really important. So what you need to do is find the job you want in 10 years. Find the people in that job and find their resumes. What most students mess up on is they look at the requirements for the jobs they want right now. That's a mistake. You need to find the resumes of the person you want to be in 10 years and see what they have. If they have an MBA from Columbia, then yeah, maybe, but when did they get that? It's true, Columbia, Stanford, Harvard, they open up doors. So sometimes you get the master's just because of the name. But my guess is you're not learning much at Harvard or those schools that you're not learning at UTSA undergraduate. I watched MIT's corporate finance class. It's exactly the same as my business finance class undergraduate. It's exactly the same class. It's no more difficult. So Julia, have you already taken that class? It's the exact same class. It really is. In fact, that may even be easier in my class. There's no new theories to learn. There's CAPM, it's all the same stuff. So if you do that, all you're doing is trying to get that name. So if I were going to Harvard or Stanford or Chicago, I might find another degree, applied math, econometrics. I try to branch outside of finance. Because if you have Harvard or Stanford and it's econometrics, it still looks pretty impressive. But you're at least learning something new. So you kind of think about it, but you don't need a master's. A CFA will open up a lot of doors that I'm not sure the CFA doesn't open up more doors than a master's will. So don't feel that pressure. I would definitely wait. So this is my other recommendation. Wait on grad school until you know your specialization. So I had that advantage when I did my master's. I knew I wanted to do insurance and banking and balance sheet administration. Because the problem with the master's with grad schools, there's a lot of busy work, a lot of group work, a lot of busy work. But you have some control over that busy work. So when you do a big paper, you do a big project, you can push your team toward the industry you're going to be in. And they don't have a clue, right? You're all sitting there, no one knows what to do. If you're the one that says, hey, why don't we do this? They're all like, yeah, let's do that, right? So you have complete control. So I did all of my papers, all of my research, I did it on the insurance industry. So like when I took Mizra's class, we had to do a paper like in this class, I did it over an insurance company. So you can have some control. So, but you can't do that if you don't know what your specialization is going to be. All right. So find these people, get their resumes, wait for grad school until you at least know where you're going to go next. So that's the advantage of the CFA. The CFA, you don't need that specialization. Its focus is on investments, and it teaches you some stuff that you didn't get undergraduate. That's the other advantage, especially part 2. There's a lot on part 2 that is not in undergraduate school at all. All right. If you're not sure, do the corporate side. So what's the key on the corporate side? Your specialization here is industry. So it's really, really easy. You pick your industry and you figure out what's the most complicated thing in the industry. So I had one student, really interesting guy, really did extremely well in my classes. He had a really low GPA. And so I looked at his resume and he had flunked a lot of classes early. And so he came to talk to me and he had a really horrible story why his grades were terrible. So he had a really serious, I won't tell you what it was, but it was a really serious legal problem that he had. So he's go, okay, professor, what do I do? I said, well, first of all, you tell them what happened because they're going to find out. So you just tell them up front. And good chance someone you're going to interview with either has had that same problem or knows a family member that has that problem. So you're gonna be there, they're gonna save you, right? You're gonna be their reclamation story. And that's what he did. And there's a firm that had not hired students from undergraduate students ever in their history. And they're gonna try it the first time. And they hired him. It was really interesting. And now they're fighting over it. They all want him. So he worked for a firm that does a lot of data mining, data analysis. I won't tell you the firm just in case I'll give his name away. So he's learning Python. So he figured out what he needed to learn and so it became obvious to him what he needed to do. When you're doing data science type of stuff, that was their firm did. It was a firm that sells data science. That made it really obvious what he needed to study. So a master's for him would have been a complete waste of time until he figured that out. So figure out your industry. And for him, it was data science. So he should get a master's in data science. He needs to learn Python, those type of things. I have another student. He's up in New York. Some of y'all, I don't know if any of y'all were in New York. No, well, he's working for transportation in New York City. He is odd about data. He's trying to figure out how taxi drivers are going to figure out, get the maximum customer. How do they compete against the ride shares? He's doing a lot of data science as well. So that's his industry. If you're working for USAA, you beg your boss to have interaction with actuaries. It's really obvious. So if you're working for Valero, you beg your boss to get a job. You beg for a job on the trade desk. You want to be on the trade floor. You want to be trading oil. That's what you want to do. You want to be selling the products, the byproducts, and all that kind of stuff. You got to learn that. So at USA, it was pretty obvious for me. I sat in a committee meeting and a complicated question was asked and everybody turned and looked at the same person. I went and made that person my best friend. That's how I did it. And so it really is, there's one person who knows everything, right? You are gonna discover that. There's one person who knows everything. They may not even have a degree, a college degree. They just know everything. And so you figure out who that person is, you take them to lunch, you go on breaks with them, you make them your best friend. And they will love it because they're ignored, because they know everything. Everybody just says, let them do everything and leave them alone. And like, no, go and compliment them. Don't be fake, be honest. But that's what I did. It's like, you seem to know everything in this firm. Can you teach me everything you know? And they're like, yeah, you're the only person that wants to know what I know. It's like, it's so easy to do. So, so your specialization there is industry. That's going to influence your grad school. That's going to influence your designations. Designations. Most industries have a designation. So life insurance had FLMI. Property and casualty had CPCU. Banking has Shezhenov. I don't know the others. So have you heard Shezhenov yet? So I don't know if Shezhenov still has it may be Keith Bretton-Woods now. So they have a certification program. I don't know what they are. I've never got one of those. But you might look that up. I think they might have bought Shezhenov out. But that's a fast way. That's a fast track. So if you pick your industries, so you pick your industry and you like, I really like this industry. And that's what you're after. I was telling my earlier class, the old saying of do what you love and you'll never work a day in your life. That's fine, but 99% of the stuff you love, they don't pay you for that. So you don't pick what you love. You find what you like, you find interesting, and you learn it to the lowest detailed level you possibly can. You learn it backwards and forward. So you find an industry, you don't sit there and say, is this the best industry for me? No, you just say, am I enjoying what I'm doing? Is it intellectually challenging? And if you say yes to that, then just shut everything else off and just jump in the deep end on that industry. That's all you got to do, in my opinion. learn that backwards and forwards. So if you're in banking, find a banking designation and just go for it. All right, so that's pretty straightforward. On the investment side, it's probably gonna be industry. It's gonna be industry or asset class. For most of it's gonna be industry. That's why I say the corporate side is a great place to work, because that's the best way to just learn the industry. But it could be an asset class. You could be doing commodities, you could be doing options, you could be doing whatever, hedge funds. It could be a type of asset class. So you can certainly do that. You don't pick those kind of things. These are kind of things that pick you. So I always tell the story, the guy at USAA who's in my department, he loved it. It was an investment job. He liked the investment side. He was learning a lot, but he had an opportunity to come up to do securitization. And he talked to me about it, and I said, you got to do it. It's very specialized. It's very complicated. There's a lot of it going on. You learn that. You're learning something that not many people know. And the investment stuff we're doing is pretty general. It's kind of strategy kind of stuff. That's a lot of people do. So he saw that opportunity, and I said, you got to take it. I didn't want to lose him. He's a really good employee. And he's now he's a senior vice president. He's moved up really fast. Some of y'all may know, who I'm talking about. He's a UTSA grad as well. Yeah, so those opportunities come up. You hear a very specialized job like that on an asset class, you just take it, you go for it, and you just learn it. Sometimes it depends on the firm you're on. So like at Valero, understanding how oil trades and how gas trades is pretty obvious. That's a pretty specialized area, so you could certainly do that. USA wasn't so much. USA didn't have that much. But securitization is something USA had because they had the banks, so you could certainly do that. It's not socialization. It's why can't I spell anything? Specialization. Is that better? Okay. So your goal the next 2 years, the next 3 years is figure out that specialization. Some of you may already do it. So some of you have some industry background, right? If you have a strong industry background, you're probably going to stick with that. If you've worked in industry for a few years, you're probably just going to stick with that. So Jose, you have some really strong industry background, right? I mean, you could certainly push that over to the investment side if you wanted to. So find a firm and say, hey, look, I got this background. The fact that you run your own business is huge. That gives you a huge advantage. So those kind of things, you're kind of stuck. You're just going to have to go with that because you have that. You don't want to throw that experience away. So if you're kind of second career, you're gonna have to keep with that. But if you're not, this is you're in your 21, 22, then let that specialization pick you. If you enjoy it, then just go for it. Don't look back. You're not going to go back, 30 years from now and say, I could have done that. I'd be 23% richer. You'll never know. Just pick it and go with it, and it works. Now on the buy side, once you get on this side, the question is, the path here is security analyst to portfolio manager. So here what you got to decide is asset class. And your choices there are stocks, bonds, real estate really fits in there, but that's really its own world. I don't know, Allison, are you on real estate? Are any of you real estate majors? I mean, you can certainly you don't have to be a real estate major to go into real estate. You can certainly do that, but real estate's kind of its own world. And then you've got residential and commercial. To me, I would avoid residential right now, mainly because my music director for my church, he and his wife, that's what they're doing now. They have no finance background. So there's a lot of people so I kind of worry about an industry where people with no finance background, they're doing the residential side. Commercial is a very good world, y'all. Some of y'all know Alex, and that's where he's going, and that's you can certainly specialize in that. And then you have the derivatives, you have the commodities. Those are jobs. I love telling the story of the student. He went to Dubai as an options trader. He was entry level. He never traded an option in his life. Sorry if I told you this story before. So It's kind of a good, encouraging story, though. Shows up the first day of his job, and the trader he's supposed to back up and quit. And so he's now their option trader. Have I told y'all that story before? So right out of college, first day on the job, he's now their only option trader. And I talked to him 3 months later. Talk about a confident, cocky person. My word, he figured it out. I don't know how he did it. If I was in his shoes, I would have taken the guy's contact list. I'd find the biggest bank he was dealing with. I'd call that bank and said, I don't have a clue what I'm doing, but I'll give you all of our business if you walk me through this whole thing. That's how I would have handled it. And that probably would have worked pretty well. And it was baptism by fire. But 3 months, not 3 years, 3 months later, he had it all figured out. I wish he would call me again because I really wonder where he is, because Dubai is not a bad place to start your career. So that's an area where you can really, really specialize. Some of y'all probably know Eric. He's up in Chicago. He's doing option trading. Any of y'all meet Eric? He's spoken to the Investment Society a couple of times. I saw him in Chicago this last summer. Very confident. I knew he was confident when he was here. I mean, he had the world figured out before. Not like I was. I was scared to death when I graduated, but he was pretty confident. He's doing great. He knows what he's doing. He could stay there. He's thinking about getting out of that and doing something else, but he's got a good specialization. So options is an area that you can certainly specialize in. I don't know too many commodity people. I know y'all have an interest in commodities. I'm not really sure how you get into commodities. Obviously, you go to Valero, get on the trade desk. You could become an old commodity trader if you wanted to. That's just not a world I know very, very well. Currencies, if you're going to do currencies, you're going to get grad school in economics. Most currency traders I know, or a lot of them have a PhD in economics. Currencies is a very special world. You have to understand central banks, inflation, interest rate theory. But if you want to do currencies, you now know what your grad school is going to be. You're going to do econometrics, and you probably can get a PhD in economics. So if any of you are interested in currencies, that's certainly a world you go. But you've got another 5 years of school to go. So I don't know if I've left out any specialized. There are specialized ones out there. If you go international, that's U.S. finance plus currencies plus politics. So, you got to learn laws and those kind of things. I know UTSA has international business. I'm not real sure what undergraduate international business is. To me, you get a finance degree and take some currency classes. And I don't even know if the international politics, that's going to help you much, because every country is so unique. It's going to be overwhelmed. So I would think you would want to, I don't know if any of our international finance majors, international business, I don't know what they study versus what you do. I would probably just get a degree in finance and just move to another country and just learn that country. That's probably the best way to do it. If you have a language skill, you could certainly do that. That could certainly help you quite a bit. Take a chance, move to Argentina. Maybe this new president's going to do a good job. I know he's kind of crazy, but Argentina used to be one of the wealthiest countries in the world. It could come back. If you know Spanish, you could go there, and maybe they come back and you're there right at the fray. Who knows? I don't know. I don't know what language they speak in Dubai. He spoke that language, and that gave him a huge advantage. So language skill is always a plus. The founder of Investment Society, he was fluent in Spanish. So he was on the emerging market desk talking to people in South America. Yeah, you have these advantages, you got to take them. So there may be a language advantage to the international side. So my guess on most of this, the specialization is going to pick you. You're not going to pick the specialization. You're going to say, I want to be a bond trader. That's fine if they hire you to do that. Victory Capital is hiring a trader. The trade desk is a great way to start. It's a scary way to start. It's the most stressful place you can start your career. But if you started on the trade desk, you wouldn't, no one could talk to you 2 years later. You'd be so cocky and confident. You'd just be like, but it would. If you want to take off your career, start on the trade desk. So you two need to ask if you can get on the trade desk. If you see a job come up like that, think about Ricardo. He started as an algorithm trader at Goldman. Boy, that looks good on a resume, doesn't it? I'm an algorithmic trader from Goldman Sachs. It's like, okay, what job do you want? What salary do you want? I mean, that's really, really impressive, but you better know Python. You better know some programming languages. You better be good at quant. So, you know, there's some career just shoots you out ahead of the pack pretty fast. So the key, to me, the key with finance is it's a few things. It's specialized. It's got to be complex. It has to have a market that is growing. That might be my concern with becoming an oil trader. If oil is going to disappear, I don't think it's going to disappear, but if oil is going to disappear, I might not want to be a coal trader, but it's a market that's growing, and you have to have a demand, good demand and low supply. So you're looking for something, and that kind of is here. Is not many people know it. Why? And these two go together. You don't want to specialize in something that's easy if you can learn it in 3 months. So how do you know you're there? You're scared to death. That's why I say, if you're offered 3 jobs, just take the one that scares you the most. That's what finance is all about. But it's got to scare you to death. But it's still got to have a business 10 years from now. So securitization, that's a scary job. That's a very complex field. Deals a lot with investment bankers. There's a lot of complex math. It's complex. That's not going anywhere. We're going to be doing securitization 20 years from now still. So that's going to be around. So it's a growing market. And there's not many people doing this. One way you can really tell that there's 0 classes undergraduate in it, it's probably a pretty good specialization. How many classes have you taken on oil futures trading? You know, we have a speculative markets class. What do they spend? Like 1 class on something like that? I talked like 10 minutes about it in my class. So if it's something you don't know much about, that shouldn't concern you at all. That's not your problem. You never, when you're offered a job, you never ask, can you do it? That's not your problem. That's their problem. If they offer you the job, they think you have the qualification. Well, it's your problem if you lied on your resume. If you say you have a PhD from MIT and you don't, that's going to be a problem. But if you're honest in the resume, honest in the interview, and they're offering the job and you don't think you can do it, you have to take that job. Okay. My first finance job, I was so scared to death of the head of the department. He didn't like me. He was type A personality. I'm type B. His comment to my boss was, if you want him, I don't think he's any good, but if you want him, that's what he thought of me because I was so quiet and shy. I finally brought him around. It took me like 4 years, and he finally thought, okay, you're pretty good, Ron. But my first 3 years, I was doing this wonderful stuff, and my boss was taking it all into his boss, and his boss thought my boss was a genius because I was doing all this stuff. I never got any credit for any of that work because I was so quiet in the background. I finally proved myself to him, and it was just one day I was lucky. My boss was out of town, a major project came up, and I said, I'll do it. And he was like, oh, that's impressive. And I did it, and I did it really well. So I had to prove myself to him, but I was just way too quiet. But, you know, you have to kind of step out of your comfort zone. And I did, taking that job. So if you step out of your comfort zone, you want a boss that scares you to death, not because they're mean, but because they know so much. Remember, you're sitting there 50 hours a week. You're going to learn it. Everybody in this room is smart. I know all of y'all, I've seen your papers. You're all smart in this room. You're sitting there 50 hours a week. You will learn it. And where would you rather be 3 years from now? The job that didn't scare you and you're training your boss after 3 months, or the job that scared you to death, even 3 months later, you're like, this is so much to learn. Where would you rather be 3 years from now? You're going to far rather be in this job, all right? Don't take the job you think you can do. Take the job that you think is way out of your league. But you do have to think a little bit about the future. So I do worry a little bit about Valero. I'm not sure Valero can make their entire business out of biofuels. I don't think gasoline's going away, but it's a little scary. So, you know, who knows? I worry a little bit about USAA with autonomous vehicles, but who knows where that's going. I think almost every industry right now is at threat of disappearing because of artificial intelligence. So who knows? That is another thing I would kind of mention is Python, machine learning, AI, chat GPT. If you're not learning this stuff, you're really, when I graduated, it was about learning Excel, and that was it. That's all we had to learn. Y'all got all this stuff making me nervous. Aren't y'all a little scared? If I were y'all, I'd be a little nervous about this. It's a little scary. So how do you learn this? Well, you can go take classes on this, but if you're not using it in the job, you're wasting your time. So what this means is you need to pick a job that does this. So you want a boss that knows all about this stuff. You don't want a boss that's hoping you're going to teach them all this stuff, right? You want a boss that knows all this. We had a student that went to Goldman Sachs, and he figured out a way to automate his entire job away. And his boss wouldn't let him do it because his boss was like, yeah, but once you leave, who's going to know how to do this? That's a horrible boss. You want a boss who has no trouble with you automating your job and their job out of existence. You want a boss that wants you doing the most advanced stuff there is. So find these bosses. So I almost think your first boss is the most important, not your first job or company or whatever. It's your first boss. So if you have 3 firms, you have a really great firm, and you got a almost as good firm, but the boss here is more impressive, I would go with the boss over the firm. All right. Find the boss that just scares you to death because of what they know. And those bosses are out there. That's probably going to set off your career better than anything. And so I was fortunate working for Bill for those 7 years. That helped me tremendously. Plus, I was working with Lisa. So I was lucky. I connected myself with some really, really impressive people, but I didn't think about that. I was just lucky that they showed up. So you need to be more determined about it than I was. I just kind of showed up and everything worked out perfectly. All right. So it's tough, but you know, you've got to, in your first 2 or 3 years, you've got to be making these decisions where you're going to specialize. If you have questions on jobs or certain careers, I still have a pretty good connection that I can give you some insights on things. AI is a little bit out of my league, and I'm not real sure how I'm going to learn AI, given that I didn't use it on the job. So I'm a little worried about that. So that may make me have to retire in a year or two. It is taking over the world. I do think it's something that's coming. Is it coming up in interviews at all? Are they asking y'all if y'all know Python? Or are they asking y'all to know? So it's not yet, but you're gonna need to at least be thinking about it. So, all right. So you're all gonna be successful. Everyone in this room, you're gonna be successful. You're smart. You wouldn't have taken this class if you weren't an upper crust student, because the mediocre students know to avoid this class. So you're already a strong student just that you're in here. And remember, I'm your professor for life. So you can email me, call me anytime. I've had students send me a project from work and ask me how I would tackle it. I might say I have no clue. It depends on what you're doing. But if I have an idea how I would tackle it, there was one of our students, his job was exactly my job at UTSA. And so I was having a blast sending him, say, if you just read this, you do this. It was just a blast. It was like perfect. And I've had some students like cryptocurrency. Yeah, good luck with that. I have no idea what that is. I don't deal with that. So, but you can email me anytime you want. Tell me about your successes when you pass the CFA exam. Let me know. If you're trying to figure out what to do in your master's, let me know. If you need a reference for a job, if you did well in the class, if you're struggling in the class, I'll try to do the best I can do to give you. So I know this is a tough class and getting all the papers in, but I'll do my best to give you a reference. But yeah, feel free to use me at any time. So how many of y'all are graduating December? Oh, Dante, I saw a bunch of y'all. How many of y'all have jobs lined up? Most of y'all kind of off and on. All right. So I know some of y'all aren't because you're in my risk class. So all right. So any final comments, questions about the class? So I need your papers. Worst case is noon on Sunday. December 10th. That's worst case. If you can't do that, but you have at least 4 or 5 papers, we can do the incomplete. But if you do the incomplete, I want your incomplete finished during winter break. All right. I don't want you going into the next semester. If you're graduating, incomplete doesn't work very well because your deadline is much shorter. All right. But if you're not graduating and you need 3 or 4 more weeks, we can do that. And I will be up here some over over winter break, that I can get you into Bloomberg and help you get numbers. If you got like 4 papers and you're like, I just got to get the first 6 papers, or these 6 papers done, I have no trouble coming up for the break and help you get the last 4 done. All right. I want you to be, I know it's a tough class. We got to get the paper done. So don't panic and just give me a bunch of mediocre papers. I'd rather have 6 really good papers and we work on the last 4 afterwards if we need to do that. So, all right. Any comments, questions? All right. Good luck. Keep me posted. Good luck to Dante and Juan Carlos going to our investment jobs there.